Welcome to the Spelling Bee Ninja podcast, where we make learning engaging and accessible. Join us every week as we explore fascinating topics in economics and beyond. This episode will dive into how public policy shapes our economy and influences our everyday lives. If you value knowledge and want to enrich your understanding of complex subjects, subscribe to our podcast for free educational content. Let's embark on this learning journey together. Public policy plays a crucial role in shaping economic outcomes, guiding government decisions to tackle various societal issues. So, what exactly is public policy? Simply put, it refers to the actions and decisions made by governments aimed at addressing significant problems and achieving specific goals. Economic outcomes, on the other hand, are the repercussions of these policies on the economy, which can include aspects like growth, employment rates, price stability, and the distribution of income. Understanding public policy requires examining how governments use a variety of tools such as taxation, spending, and regulation to influence economic activity. For example, when we look at taxation, it's critical to consider how different tax policies impact behavior and choices. Higher taxes on unhealthy products such as cigarettes can discourage smoking, resulting in public health benefits. On the flip side, lower taxes on renewable energy initiatives can encourage investments in clean technology. Income tax rates can also shape individual choices regarding work and investment, as higher rates might prompt people to work less or seek ways to shelter their income from taxation. The challenge for policymakers lies in navigating the trade-offs of tax policy, collecting revenue while minimizing the adverse effects on the economy. Moving on from taxation, government spending is another vital area that can significantly stimulate economic growth. Investments in infrastructure, such as roads, bridges, and broadband, serve to enhance productivity. Similarly, investing in education and workforce training develops human capital, fostering innovation and higher wage potential. Scientific research funded by the government can lead to breakthroughs, creating entirely new industries. However, it's important to consider that government spending must be financed through taxation or borrowing, both of which carry their own economic costs. The effectiveness of spending hinges on the nature of investments. Those with higher returns tend to yield more significant benefits. Next, let's talk about regulation. Governments establish regulations to promote safety, protect consumers, and ensure fair competition. Regulations can take many forms, including health and safety standards, environmental protections, and labor standards. While regulations provide essential safety and security, they also introduce complexities, such as compliance costs for businesses and potential barriers to entry for startups. The implementation of regulations must be thoughtfully balanced, weighing the benefits of consumer protection against the economic costs they may incur. After regulations, subsidies represent another critical government intervention. These are financial aids given by the government to encourage certain sectors or activities. For instance, agricultural subsidies support farmers, while renewable energy subsidies promote the shift towards sustainable sources. However, subsidies can become topics of contention, as they may create market inefficiencies, shape dependency on government support, or disproportionately benefit politically connected industries. Examining the rationale behind subsidies uncovers the trade-offs involved. They can correct market failures and support industries while also placing a financial burden on taxpayers. Moving towards monetary policy, this involves the central bank's management of the money supply and interest rates to influence economic performance. Key operational tools include adjusting interest rates, conducting open market operations, and setting reserve requirements. When interest rates are lowered, borrowing becomes cheaper, stimulating both spending and investment. Conversely, higher rates can cool down an overheated economy. It's crucial to be mindful that monetary policy operates with a time lag, meaning today's decisions will only bear fruit in the future. As we navigate through public policy, it's essential to recognize the potential for unintended consequences. Often, policies may yield effects that were neither predicted nor desired. Take rent control, which aims to make housing more affordable but may ironically lead to a decline in the availability and maintenance of rental properties. Similarly, while minimum wage laws intend to aid low-wage workers, they can sometimes result in reduced hiring and increased automation. Understanding these unintended effects highlights the importance of carefully evaluating policies before implementation, considering how the public may react to government decisions. Let's also examine how public policy impacts income distribution. Governments employ various tools to address income inequality, including progressive taxation, transfer payments like welfare, and funding education initiatives. These measures aim to level the playing field, providing a safety net and promoting equitable opportunities. However, it's essential to understand the trade-offs involved in redistribution. While it can encourage fairness, excessive redistribution may dampen individual incentives to work and invest. The balance between these competing goals varies by country, revealing diverse approaches to economic and social justice. Lastly, we arrive at the critical topic of policy evaluation. This practice assesses whether government policies achieve their intended objectives. Evidence-based policymaking relies on rigorous research methods like randomized controlled trials and program evaluations to inform decisions. Understanding the impact of policy helps governments determine effective practices that can be replicated. Yet political pressures sometimes hinder evaluation processes, leading to the continuation of ineffective policies simply because they are politically favorable. This examination of public policy illustrates its profound influence on our economy and society. Key takeaways include recognizing how policy choices affect economic behavior, acknowledging that every policy presents trade-offs, and understanding the necessity of evidence-based decision-making. As engaged citizens, grasping these concepts empowers us to participate in vital discussions surrounding the role of government in our lives. In this episode, we delved into the intricate dynamics of public policy and its economic implications. We explored the major tools of policy such as taxation, spending, regulation, subsidies, and monetary policy, emphasizing how each plays a unique role in shaping economic outcomes. Additionally, we discussed the potential unintended consequences of policies and the importance of evaluating their effectiveness. As you think about the various ways government decisions touch our lives, remember the trade-offs they entail and the importance of active engagement in discussions about these issues. Thank you for joining us on this enlightening journey through public policy and economic outcomes. We hope this discussion helped clarify these essential concepts and sparked your interest in further exploring economics. If you enjoyed this episode, please subscribe to our podcast and share it with others eager to learn. Together, we can continue expanding our understanding of the world around us. Stay curious, and until next time, keep learning.